Hello and welcome to the Blockchain and Us, where pioneers and thought leaders talk about their journey in blockchain technology, crypto assets, and the token economy. And I'm your host, Manuel Staggers. If you enjoy this podcast, please give it a top rating and review on iTunes, and feel free to follow me on Twitter at Manuel Staggers. This episode has support from Shift Crypto Security, the maker of Bitbox, a minimalist hardware wallet for cryptocurrencies. Bitbox is rock solid, compact, portable, easy to use, and designed and manufactured in Switzerland. To learn more and get your wallet today, visit www.shiftcrypto.ch. My guest today is Jack Tatar. Jack is the co-author, together with Chris Burniske, of the bestseller Cryptoassets, the Innovative Investor's Guide to Bitcoin and Beyond. He is managing partner of Doyle Capital Management, an investment firm that invests in and advises early-stage companies in the crypto asset and blockchain technology space. Jack has over 2 decades of experience in financial services, and he is the chair of the Cryptoassets Working Group for the Wall Street Blockchain Alliance. He is also the co-author of one of the earliest books on Bitcoin called What's the Deal with Bitcoins, and has written numerous books on retirement and finance. Jack is also a contributor to Forbes and has written for Marketwatch, CNBC, and about dotcom. And now, to the interview. Hello, Jack, and thanks a lot for making time today.
Manuel, thank you very much for having me. I really appreciate it.
Recently, I had a conversation with an investment professional here in Switzerland, and he was convinced that the value of Bitcoin will go to zero eventually. I mean, he was very adamant about that, and I tried to come up with good counter arguments, but stumbled a little bit. And I'm sure that you have a whole bunch of very good counter arguments.
Well, the first thing I would say is when you mention the person's an investment professional, you've got to wonder where he's getting his paycheck from. And the reason I say that is because obviously the financial status quo is not that keen on seeing something like Bitcoin succeed. So I think the intent is to hit Bitcoin with a lot of fear, uncertainty, deception, and stories about it being a Ponzi scheme and all of those types of things. And with the intent that at some point maybe they'll do some damage to it, but it's really an uneducated and view, and I think it does a disservice to investors. Mm-hmm. You could potentially see Bitcoin go to zero, and not so much for the reasons that probably your friend had thought.
Mm-hmm. Well, his whole point was that everything that has no intrinsic value, everything that you cannot use to build something or make something out of or eat, will eventually go to zero. You know, fiat money will, and so will cryptocurrency. That was his whole point.
It's an interesting point, because I think that so many people have to change their thinking here. One of the things that I like to go back to is a study that Joel Monegro did about fat protocols, and many people know that. And I was having this discussion last night with a couple of investors, where you've got to kind of get your arms around how this is different from the dot-com era and the internet. With the internet, what we had with the internet is you had that the layer of the internet was out there, but the value that was created was within the applications, Facebook and all those applications. That's where the value was. That's where people made money, but it didn't help the ecosystem of the internet. Mm-hmm. What we have right now,
I mean, sorry to interrupt. It's always the point that where people say, well, you know, just to be on the internet, you don't have to pay anything, right?
Right.
So that's that whole point. But you can invest in Amazon, and that's how you make money. But you cannot invest in the internet.
Right, and that's fair, and that's a very, very fair point. I think what's different, and what ends up happening with that, is then the applications end up having more of the value, and there's no value, or there's less value that's given to the ecosystem that's running it. So the community and all of that. So the internet suffers, and we get all of this this garbage that's on the internet, slow speeds. We kind of hand it off to phone companies and internet providers to handle that. Whereas I think with what we're seeing now with the world that Bitcoin has created, is that we see more value in the protocol, the underlying infrastructure that's there, and that's where the value can be created. And the reason that the value can be created there is because it's open source. There are more people engaged in preserving that ecosystem, making that ecosystem work. I mean, that's what Bitcoin is. Bitcoin is a reward system for people running the ecosystem. So there's a real interest in ensuring that the community and the ecosystem works. And then the applications that are built on that potentially have less value. And I think this is where we've got to get our arms around understanding that the thinking that we have right now with Bitcoin and blockchain and crypto is different even from the thinking of the internet, because the underlying value becomes in the protocol layer. And there are issues around governance. There are issues around inclusiveness. There are issues around making it open source to let people really make that underlying ecosystem as good as it possibly can be. It's not about just being a platform for applications where we can create billionaires. This is a different type of thinking. And from the perspective of even just investors, getting your arms around that is a real transformative thing. It's a whole sea change of how people think. And I think we're starting to see that with investors who are looking at this platform. To come back to your point about Bitcoin as going to zero, it is all going to be about that protocol. Which one of those protocol layers will be the best for the community, will put something out there that benefits as many people as possible. Potentially it could be Bitcoin, potentially it could be something else.
Mm-hmm.
So,
maybe something we don't even know yet, right?
Exactly.
But when you made this argument in your book, Cryptoassets, where you had this nice graphic, and I think you quoted that study as well. But I'm wondering, what are examples of such applications? Because I've read somewhere that pretty much the only profitable business on the blockchain currently is trading cryptocurrencies. But what are other applications?
Well, when you talk about profitable investments, it's an interesting point, because you start to wonder, all right, our thinking right now is to have a company, and that company should make profits. It should make revenues, and that's where people make money. But I think what we see with the internet is we see that if a protocol is properly built, and people use the protocol, and people see value in the protocol, then in essence, the value of that token that is running that protocol should increase in value. That's what you're seeing with Bitcoin. So Bitcoin isn't a company. Bitcoin is really that protocol there, that layer that's there, and we're seeing it rise in value because of the usage that it has, but also the reach that it has. The fact that this can be used cross borders, the fact that this can be used and applications can be built on it. Applications can be built on the side chains of this. But no one is there saying, in the Bitcoin office saying, okay, well, you've got to pay to use this, you've got to do this, you've got to use. There's not a company there. So what ends up happening is there's no equity in Bitcoin, but there's a token value there. And that's where we see the investments rising. So there is a little bit of change in thinking here around what we've always viewed as equity earning money by a central authority to now a distributed protocol that gains value for everyone involved through the value of its token. And I think Bitcoin is an example of that.
Right.
But it takes a little bit to get your head around it. And in fact, when you reference back to the book, even our thinking has evolved from the book, because in the book we're looking for, okay, where are investment options for people? And I think they do exist, and they still exist on the equity and the token side, but it's also interesting to see where this technology is moving and where it can potentially be 50 to 100 years from now.
Yeah, absolutely. And I'll come back to that and ask you where you see this whole space going, of course, as well. Is that argument that you just made with everybody gets a chance to invest in the underlying protocol in the Bitcoin blockchain or the Ethereum blockchain for the first time, that wasn't possible before with the internet, but this time it is that the most convincing argument that you usually make to mainstream investors who want to also invest in crypto assets?
Well, I think that's a bit where my thinking has evolved. But I do think that when I do talk to investors and they say to me, what is the real value of Bitcoin and why would people invest in Bitcoin and see a raise in the value of it? I think it goes back to exploring the way we currently do things. For instance, we have the financial systems that are out there. They're centralized systems. So they have to go through somebody. Somebody is basically giving you the ability to get to your money and use your money. And if somebody wants to send money across borders, there are fees and charges for it. Mm-hmm. You want to use a credit card, a business person has to pay 3% for the ability to use their credit card. What happens with Bitcoin is Bitcoin creates a whole new world now where there's no one essentially in charge from a centralized position. There's no bankers out there. There's no status quo. There's no entity out there that's controlling this. But it is now decentralized, and it now allows for people to transmit money. Let's remember that when Satoshi did the white paper, he basically the title of it is a money transfer system. I mean, it was created, I believe, and Chris and I, when we wrote the book, we believe it had a lot to do with the financial crisis of 2008. Yeah. So it is a shot across the bow of the status quo. There is no denying that. But what you now have is you have a system that transcends borders and allows people of any income level, any wealth level to send money back and forth at a lower price. The ability to send money to other countries and not get hit with 10% from Western Union, or for businesses to take money and not have to take a 3% hit, are very powerful things that translate into an improvement for business, an improvement for the livelihood of people, and hopefully it changes for society. So, and it works. And it works. So when people say to me that Bitcoin is nothing and there's nothing to hold on to, Bitcoin is working today throughout countries. It has created a whole layer for people to do this type of thing. Where what it's not doing is it hasn't put money into the pockets of the status quo. And it's very interesting when I come to the space as somebody who worked in financial services for almost 3 decades. And potentially, once the investors and financiers and banks start to realize how to make money off this system, it may or may not be a good thing for Bitcoin. And I think that's a real reason why they diss it now and they complain about it, because they haven't figured out how to make money in it. But the intent here was not to make money for a single entity. The intent was to provide an ability for people of all levels to improve themselves, improve their financial situations in a very decentralized manner. And that's threatening to many people. But as you and I know, this is working today. It's providing value to many people out there. And we're just only beginning to see the impact that can be created with this. Mm-hmm.
And you just mentioned banks before who don't see how they are able to profit yet from all of this. But still, I mean, Goldman just announced that they start trading Bitcoins, and I mean, many of the big banks have their own permission blockchains. So I think we're past that already. I mean, that was maybe an argument, that was very fresh. I mean, maybe last year or 2 years ago even, but I think already it has proven its worth. Not just Bitcoin, the whole crypto asset space, I believe.
Well, I agree with you that the companies are jumping in. I don't know if they're jumping in; they're kind of dipping their feet in the water. I think what's interesting here is if you remember when we had the run up to 19,000 with Bitcoin recently, and then obviously the drop down to where we are now, and we've had some stability on this price level here. But you can actually find, and there's been some recent articles that have popped up there that indicate that run up had a lot to do with the fact that the financial service industry was now getting involved from the introduction
with the futures,
of futures.
Right? Yeah,
exactly.
Right, exactly.
So the introduction of futures. There's a lot of data that we're now able to look back on. And this is one of the problems with crypto assets is we don't have a lot of data, which is also one of the criticisms of people in the financial service area that for them to recommend assets to clients, they need more data. And it's a valid point. But I know there's been a lot that's been done about the data that has been created since the futures market came in and the crash, and there seems to be some correlation. So like to my point earlier, now that we've got the financial service industry in, is it a good thing or is it not a good thing? And my feeling is I think we're going to start to see more of the individual investors getting involved in crypto. But what's missing right now is an education and information to them. You mentioned before how some of these firms are jumping into this space, but there are many investment firms, wealth management firms who are handling trillions and trillions of individual investors' money, and they are not letting their advisors even mention Bitcoin to their clients. They're telling you cannot discuss Bitcoin. That does a disservice to them, and it also creates an information gap that I think is detrimental to investors who want to get involved in this space, because we have a lot of expertise and knowledge in the financial service area. But if they're told not to discuss this with their clients, then the clients make investment decisions with less information, which is never a good thing. So I think that's a gap that has to be filled in, and a big part of it has to be filled in by the investment firms who have to come to terms with understanding Bitcoin, understanding blockchain, understanding crypto assets, and educating clients on it, or else we're going to have situations like we saw where something goes up to 19,000, everybody jumps in, they don't have a lot of information, and then it drops down. And whether their intent there, maybe they're, I don't want to be a conspiracy guy, but whether that was their intent to do that, the point was that people didn't have enough information to make those decisions and just jumped on a moving bandwagon that ultimately had to stop. So it's a big thing that the firms have to do, is to raise the education level, not only for the investor but for these firms as well.
Yeah, I think it's a very good point. How many people do you think are really investing in crypto assets at the moment?
Well, I don't know the numbers, but a couple of things qualitatively I can say to you. I mean, obviously we see the quantitatively we see the increase in wallets, and when Coinbase is the number one app on the Apple Store, we know that people are opening this. So the numbers are out there, and they're increasing. That people are doing this.
But what percentage is it roughly, maybe, of people in America?
Oh, I don't. That's a good question, man. Well, I don't know. I would say that it's. I just recently saw something, and I'm sorry I don't have that information at my fingertips, but it is definitely a number that's increasing. But let me put it this way. Let's put it this way. Those people who are doing it, how are they doing it? Right now, potentially they're going to Coinbase, and they're probably buying Bitcoin, Ethereum, potentially Litecoin. How much they're doing with the other crypto assets, and we have 1,500 crypto assets out there. How much they're doing there, I don't know. And let's face the reality. I believe that, and I get involved in this space a lot. It's not an easy space to navigate if you're not that knowledgeable. It's really not. The user experience across different exchanges is not good. The storage and custody of these assets is not easy. So for those people who want to venture and get involved in this, there's a lot of education you need to know. But let's think about a situation potentially in a few months where investors don't have to worry about custody. they don't have to worry about opening an account on Coinbase, but they could buy from either their online brokerage or from their advisor an ETF or an investment fund that invests in these crypto assets. I think once you see that happen, then you will have a large number of people involved investing in this. So yes, numbers are increasing for who owns Bitcoin and who has Bitcoin. But at certain points in time, people are going to realize the user experience isn't great.
Yeah.
But when we get to the point, and we're almost there, where we're going to have regular investment vehicles that are easy for people to invest in, that with no concerns about custody, no concerns about having to go online and do this themselves, but to put it in a packaged product like an ETF, then I think we will really see a growth in people getting involved in it. And then I think a lot of the things that we cover in the book will come into play. How do you classify this in terms of asset allocation and those types of things?
Yeah, good point with the ETF. Absolutely. I mean, I've been waiting for this for the longest time. I hope it happens soon. What is, in your view, who do you think crypto assets are for? You know, from an investment perspective, should everybody have a small percentage of crypto assets in their portfolio, or is it just for more qualified investors? What do you think?
Well, this is something, and I'm going to put I'll very quickly put my financial advisor hat on.
Okay.
As I've gone through all of the licensing and everything else, I still don't practice it anymore. But the reality is every investor is unique. Every investor has their own risk profile that they have. Every investor has their goals and objectives. Those things all have to come in play before you say, this type of investor should have this type of investor shouldn't have it. So I'm not one to say that everyone should have it. That being said, I do think that it plays a role, and I'm talking about Bitcoin and crypto assets. It does play a role for people in terms of asset allocation. Typically, asset allocation models that we see with investors are made up of stocks and bonds. And the reason there is because typically they move differently from each other. You're always going to get more growth from stocks, a little more risk, and typically bonds will move in an opposite way from them. What we saw in 2008 is that both of them dropped at the same time. So there was a real interest in saying, is there another category of investments there that are not correlated to stocks and bonds that I can put in my portfolio to protect myself? And that's alternative assets.
Right.
So now, alternative assets, depending on your age, where you are, your goals, all those types of things, can be anywhere from 5 to 20% of your portfolio. Obviously, a younger investor should have most of their investments in stocks and potentially a larger allocation in alternative assets because they have a longer time frame to take risk. Someone such as myself, who's a little closer to retirement, I want to be a little more conservative. So I may have more bonds in there and a little less allocation to alternative assets. So that's why I'm saying it's different. It's different for everyone. But I do believe that Bitcoin and crypto assets, because of their ability to not be correlated, because of their ability, specifically Bitcoin, its ability to have a high Sharpe Ratio, which is essentially the amount of return you're going to get for the risk you're taking. It's far beyond what you would get with equities or other types of investments. So to put those things in your portfolio can really be growth machines for your portfolio. However, we know that they're risky. That's why you're getting paid a high reward. So they're risky. We've seen the volatility. So they shouldn't be a big part of your portfolio. And that's why I think people should view them in this alternative asset sleeves, that 5 to 20%. The other thing that I'm seeing as well with young investors is young investors have kind of grown up seeing that the stock market is either rigged or a little bit of a casino. They're not all that comfortable. And I often refer to crypto as kind of a gateway drug for the millennial investor. But I think the reality is correct, because a lot of millennial investors are investing in crypto and they're learning how to invest because of their experiences in crypto. So I'm encouraged by that, but I also think that potentially these people are probably putting more money than they should into crypto But the reality is they're learning about investing, and to learn at an early age and potentially lose some money or make some gains at an early age is good. But it's my hope that they also learn how to invest, and that's why I come back. That's why I come back here as well as in the book to a lot of those financial analysis tools and those time-tested tools of modern portfolio theory and financial tools that are out there that I think work for any asset, whether it's equity or crypto.
Mm-hmm. I would just wanted to ask you about that, because I often hear the argument where people say, oh, using a Sharpe ratio is ridiculous for crypto assets, or modern portfolio theory doesn't apply. That's so, 1960s or whenever Markowitz came up with it. I mean, but you're saying it does apply, and we should use those tools to also with these investments.
Well, I think you have to have some tools out there to manage your investments and manage your portfolios. I mean, Harry Markowitz came up with this years ago, but I spent time with Harry Markowitz writing the book. Mm-hmm. The man is still doing a lot of work on risk reward. Now, granted, are some of his beliefs and some of his work a bit outdated? Should it be changed? Obviously. I mean, that all happens. That's going to happen with the work in our book. But it becomes a foundation to build upon. So you have to have some tools and some methodologies out there. It's interesting you mentioned about the Sharpe ratio. I had this discussion last night with an investor over dinner. The same point was that the Sharpe ratio doesn't matter for crypto assets because there's not enough data. And that's probably correct. That's probably correct. However, I do think that there's enough data for Bitcoin, which has been around now for 10 years. Mm-hmm. There's enough data out there regarding Bitcoin price and everything else to potentially not validate whether or not the Sharpe ratio should be applied to it. But I think you can apply it to it and continue to evaluate it to see if, in fact, it works over time. This is one of the problems that it's an inherent problem with what we were doing with the book to try and tie back to a lot of these financial beliefs is because there's not a lot of data out there. And it's our hope that we put in kind of a foundation for thought and at least some semblance of that people could build upon. And we're going to see more analysts come into this space. We're going to see more data being gathered. We're going to have a longer history with Ethereum. We're going to have a longer history with other cryptos. And we can apply that data using the same tools that we've been evaluating stocks with in the past. And I think that's a good thing for people to evaluate this and come up with it, because I think we will see analysts in the major firms who will start to evaluate this. I think this is also a reason why many of the financial firms haven't embraced this, because the reality is there's not a lot of data out there. So when you make a recommendation to someone about go and buy this asset, you need to do it based on past data. So we don't have a lot of past data. But what I think we wanted to do is create that platform for people to evaluate things going forward. And I think you'll start to see that. And we may be proved wrong on some of these things, but to us, what was more important was to put a stake in the ground and say, let's at least use this for evaluation purposes and build upon it. I would be thrilled if 10, 20 years from now, someone comes back and looks at something in the book and proves us wrong. But at least they use the analysis and the approach that we took in the book to at least get them to that point of proving us wrong. You know what I'm saying?
I know absolutely what you're saying. And I just wanted to add, I think it was important that this whole passage was in the book about how to do technical analysis, how to do fundamental analysis with crypto assets. I think it's very important that people understand that this is a serious asset class that you can use tools with.
Yeah, and Manuel, every day there's a new article that's written out there from somebody who's putting some chart that's comparing maybe the amount of money that's coming into crypto versus things with the dotcom. But it's very interesting to me to see the wealth of research that's going on in the community. I mean, really open source research is going on by people in the community that are exploring things that are either in the book or in the areas of finance.
Cool.
And I think it's very interesting. But I do want to caution people. We've had Bitcoin for 10 years, probably. And I started writing about this in 2013 of Bitcoin as an investment. So that's 5 years ago. And for probably 2 of those years, I was belittled as a maniac standing on the corner saying, avoid this guy because he doesn't know what the hell he's talking about. But now we probably have 3 years of where people are starting to evaluate this more and more as an investment. So this is still very young. It's still very new. And obviously we don't know all the answers, but I think you can put a lot of the tools and a lot of the resources we've learned from finance to these assets to either validate them as good investments for people or appropriate investments or some way to evaluate whether or not people should be getting involved in these types of things as an investment.
Yeah, I think it's very good points, and definitely that's always good advice, right? Just apply tools, do analysis, and then invest. Just make sure you understand the risks. What do you see? Let's call them professional investors or institutional investors. How do you see them approach this asset class?
Well, I think we're seeing more institutional investors come into this space. I will just, I as a venture capitalist and running a venture firm myself, we're encountering a lot of institutional money coming into this space and wanting to take advantage of this. And the good news there is that we've got people looking at it. We've got analysis going on there. One of the potentially bad things is that though these opportunities will only go to accredited investors, people with substantial amounts of money. And so therefore the regular investor may not have the access to a lot of the products and investments that we're seeing there in the hedge fund and venture side of things, and even with a lot of the ICOs that are coming out. But I'll go back to my point earlier about ETFs coming out. I do some work for I'm an advisor to a company up in Canada, 3iQ, and we actually presented to the OSC, which is the Canadian version of the SEC, and they just got approval to be the first multi-crypto fund to be offered out there to investors. It will be sold by financial advisors to investors, accredited investors, but they also got approval to be for a Bitcoin ETF and an Ethereum ETF. So you will see ETFs coming in the Canadian market, and I think once you see that, you're going to see that happen. When do you think
that will happen?
That's probably going to happen within the next 6 months.
Oh, cool.
With 6 months. Now, I don't know what's involved with it now coming down to the U.S. or being set up in the U.S., as well as how it will be embraced by the financial firms. Will the financial firms even make their investors aware of these products? So that's a challenge there as well. But I guess the point is that institutional money and it is now taking a look at how do we create investment vehicles out of Bitcoin, out of these crypto assets, and put them into packages and products that can work for investors. And that I think we're going to be seeing that. Once that happens, I think hopefully the firms will start recognizing they need to educate their investors better. But I also think I look forward to a future where potentially we could start to see some portfolios of various crypto assets. If anyone familiar with the book knows that one of the reasons we called it crypto assets was to be very clear on the taxonomy around this. You have Bitcoin, which is a cryptocurrency. You have Ethereum, which we believe is a crypto commodity. And then you have crypto tokens that are a lot of the applications, a lot of the ICOs that you've seen out there. One of the reasons that we wanted to be very clear that these are not all cryptocurrencies and have their own properties is because you can't compare Bitcoin to Ethereum. they do different things. One is not going to replace the other. Bitcoin is a cryptocurrency. Ethereum is a platform to develop upon. All these different apps do different things. So I see down the road, almost like what we have with segmentation on some of these quality cryptos come along. And there are many quality companies and quality crypto assets out there. You can potentially see portfolios that are made up of, let's say, 30% smart contracts, 20% privacy coins, 40% some other segment. So you can see segmentation just within crypto assets.
Interesting.
And you'll see portfolios actively managed and potentially passively managed that will have different segmentations in these investments. And I think that's a little further down the road, and that obviously is going to consist of having more data, more analysis, or whatnot, but it will provide diversification for investors within the crypto asset space. If people are going into the crypto asset space and they say, I'm in Bitcoin, that's all I need, well, we know there's 1,500 crypto assets out there. So you may not be getting the full potential from the whole crypto asset market by just investing in Bitcoin. So that ability to have a diversified portfolio in those different segments, I think, is going to make for very interesting products that will be created by the institutional and financial service firms down the road. And I think, probably 3 to 4 years, as we have some more data and some more courage on the side of these financial firms to get involved in this, I think we'll start to see some of those multi-crypto, multi-asset segmentation types of portfolios start to appear for people to invest in.
Let's take a quick break for a message from our sponsors. Shift Crypto Security is the maker of Bitbox, a minimalist hardware wallet for cryptocurrencies. Storing your digital assets safely should be a priority, but software and phone wallets can't protect your assets from hackers and malware. The Bitbox can. Developed by a team of experts who combine Swiss pioneering spirit with a strong commitment to crypto security performance that is second to none, the Bitbox is rock solid, compact, portable, easy to use, and designed and manufactured in Switzerland. To learn more and get your wallet today, visit www.shiftcrypto.ch.
I think we'll start to see some of those multi-crypto, multi-asset segmentation types of portfolios start to appear for people to invest in.
Mm-hmm. Interesting. You mentioned before quality assets need to be in these portfolios. And you have also a section in the Crypto Assets book where you describe how to do analysis of crypto assets. What are the metrics that you look at there?
Well, we go into, you talk about an evolving space, and one of the most evolving spaces here with crypto assets is valuation. Mm-hmm. And my co-author, Chris Burniske, has done a lot of great work in terms of valuation, groundbreaking work in terms of trying to evaluate these assets and how you would value them, and taking a look at, velocity, how many wallets have been opened, how many transactions have been done, all of these types of things. We're a bit hamstrung because of the lack of data for some of these smaller cryptos. So it's an evolving space. I know Chris has done a lot of work out there. The good news is that he's also encouraged and created a platform and a foundation for people to build upon. And we're now seeing more people kind of get their arms around valuation and take different approaches to it. And as we get more and more data, we can start to recognize really where valuation fits in. Mm-hmm. I don't think there's any cut and dry way for doing it right now. And I'm encouraged by the work that's being done there. But one thing I do think can be done with these ICOs that are coming out is there are ways to evaluate these ICOs just from the simple fact of, is it something I should be investing in or avoiding? And in the book, we spend some time about evaluating ICOs. And I think this is very, very important for the investors of today. We know what's going on over the last year with ICOs. I mean, 6 to 8 months ago, you could have closed your eyes and you would have doubled your money with an ICO. Anybody tells me that that they're an amazing trader because they made all this money on ICOs, get in line. I mean, there wasn't much to know. That being said, it is tougher now, but there are some really good projects out there. Now, how do you evaluate these projects? We feel in the book there are some ways to evaluate them. You evaluate them on things like the user community, because if an asset's going to grow, you've got to have a strong user community, and there are numerous sources out there. One of the websites that I love is cryptocompare.com. CryptoCompare provides information, such detailed information on all of these assets, to the point of you can actually go out there and you can take a look at an asset, any crypto, and know how many social media posts they've made today.
Right. I was just wanted to ask, what are the metrics that you look at when you try to evaluate how big is the adoption and the network?
Well, there's that type of data. How many people are now using the tool? How many people are using the product? We even think, and remember, these applications are open source, and they should be open source. If you're investing in something within this space, having it open source and decentralized should be a base to the criteria for how you're investing in this, as well as who's the team that's involved with this. And I'm not just talking about the development team. Who are the advisors that are on board? And if you look at the space, you can know if so-and-so is involved with a product, with a project, probably a good project. You can also take a look at a project and say, if so-and-so is involved with them, I'd be skeptical. Skeptical. How much time are they actually providing to this? So, I mean, these are things that obviously people have to know. But so there's those types of things. There's also, you can actually find with Crypto Compare, you can actually go in and take a look at the developer activity. Now, this is a very important aspect of evaluating an ICO. You put the ICO out there. Okay, it's really the only way that you reward the developers. Okay, the developers get a piece of the ICO. That's another thing. You want to take a look at distribution, how much distribution is going to the developers, to the advisors, to the public. There are those types of things. We discussed that in the book. But in terms of developers, a project only works if you have a robust, active developer community. So if you put an ICO out there, the developers get their coins, and within 6 months, you're starting to see less activity from the developers, there's a good chance that maybe those developers are jumping ship and they cashed out and they took their money, and that project could become a very stagnant and ultimately a dead project. But if there's a distribution model that says we're going to pay our developers, we're going to give our developers coins now, coins in 6 months, coins in 12 months, and it's spread out to keep the developers working. And you can actually, on Crypto Compare, you can actually go in and take a look at the lines of code. How many lines of code are they doing? How much work is being done by the developers? It's all out there. So to have a rich, robust developer group working on a project is very, very important. And there are projects, when you look at this data, you can really identify some projects out there that are active, that are making an impact just from looking at a lot of this data, and also, tracking things. Are how active are they on social media? Who's following them on social media? There are a lot of ways to evaluate these assets. So it's not something to say, oh, somebody around the corner said I should buy EOS, and I don't know anything about it, so I'm going to buy into it. There is information out there for you to evaluate this and get into this. And this is not just new ICOs, but existing assets out there as well, because there are some undervalued assets out there. And if you look at their data, that the underlying data, a lot of it we talk about in the book. If you evaluate them, you can really find some diamonds in the rough, I believe.
With your I wanted to ask a little bit more about your own investment fund. So you said since 2013 you've been writing about Bitcoin and advocating investments in crypto assets. And in your own investment funds, how do you approach your investments there? I mean, how do you, obviously you use all the tools that you described in the book, but are there maybe other things that you look at as well?
Right. Well, we do a very, very thorough due diligence evaluation of assets, and we have my team is small, but we have Fortune 1000 CEO who has been with a company for 30 years, and he can look at a financial report, not just from an existing business, from an ICO, and really find what's right and what's wrong. And that is a key part for what we try and do here. When we look at investments, we don't really differentiate them by saying this is a crypto investment versus an investment we would have made on an equity standpoint. We try and go in and evaluate them similarly. Now, they may work differently. But there are still things that you want to evaluate and look at that aren't different between, the way we used to make investments years ago in equity investments.
But you're investing, it's a venture fund, right?
Right. So we do. So in all honesty, we do a lot of early stage investors. So we have worked with everything from 2 kids in their college dorm to companies that have come to us and said, we're going to do an ICO. And we say, don't tell us about your ICO, tell us about your business. And they tell us about their business. And many of these companies, recently, we've said, let's step back from the ICO and let's fund you to get your product created. And then we'll take a look at the ICO. Because there's a lot of issues with ICOs. There's security versus utility. There's also aspects of where down the road are you going to get the most value? Are you going to get the most value out of the equity portion of an investment, or are you going to get it from the token value of the investment? And this is something that that is much different from our old thinking, but it's been evolving over time for us to take a look at, because we want to take a look at long-term growth while also being able to fund a business. I mean, I think what we've seen too many people come in, advise companies, and say, do an ICO, we'll take our money, and we'll go. And to us, if a company is a good company, is an investment, you want to be in it for the long term. So for us, going in and doing an ICO, it could be the right thing to do. But if it's just a money grab and something where let's make our most money here, and if that's where most of the money can be made versus down the road, we'll potentially step back from that. We would rather see a business provide value over time. And it's not an easy thing to do in this space, but it's something that we feel like we found businesses that are those diamonds in the roughs. And the other thing we'll do too, Manuel, is we'll actually invest in existing cryptos where we feel there's value. So we do everything from early stage investing. And when I say we do early stage investing, we get involved as advisors. We get involved with the businesses from, everything from setting up their HR to setting up their financial records to their marketing and all those things. We really try and get involved there. But then we also in our fund, we believe that there are certain crypto assets out there that may be undervalued. So we do our own analysis there, and we've identified some cryptos that we feel, maybe a little bit out of favor here. They still have a valid business case, long-term case, but the market doesn't recognize it. So there are opportunities in there where we will go in and buy cryptos, but we're not a crypto trading fund. We don't get in and out. We like to find the value over the long term. And that's what we invest in. And we do try and seek, back to the discussion earlier, we do try and seek those companies that are trying to build value in the protocol versus just strictly an application out there for their own benefit. I think that long term in this space, that's where we're seeing a lot of venture people starting to look at this, because long term, that's where you're going to get the most value. It's not those people who go out there and they say, we do ICOs, come and work with us, we'll do an ICO. They're looking for them to make their money quick, move on, and do another one. And is that really what a business wants to do? We'd rather work with entrepreneurs and people who are looking to really, with a vision, to create it for the long term, rather than just a quick hit on the ICO front. So
Good
That's how we
point.
kind of take a look at things.
Absolutely. It's definitely more sustainable. Jack, you said before that you have been in the investment profession for 30 years. How did you, or what moved you originally to get into that line of work?
Well, I'm from New York. I have a degree in economics, and always interested in finance. Actually spent some time with some of the big banks, and then actually spent some time in the technology sector during the dot-com era.
Mm-hmm.
And then I became a financial advisor really during the whole dot-com era because of my knowledge with tech companies and things like that. But I worked with clients, right sitting across the dining room table from individual clients, understanding what their goals and objectives were and what they were looking to accomplish and what investments fit right for them. And then I worked for a number of years in a more C-suite manner with financial service companies, and also doing research for these companies. And in fact, it was out of one of the research project that we were doing where we were kind of tasked with trying to find what's out there 2 or 3 years down the road. And we came across Bitcoin back in 2012, 2013.
Mm-hmm.
I had some associates on my team take a look at this, and out of that grew a book, which I contend is, if not the first book on Bitcoin, one of the first books on Bitcoin, which was something called "What's the Deal with Bitcoin?" And it's actually still out there. We actually provide it to people as a PDF for free. If you go to thebitcoinist.com, you can download it for free. But it was one of the first books out there. But additionally, I had written books on finance and retirement, and it was through my writing in that area where I started to take a look after writing the Bitcoin book. Could Bitcoin be an investment?
Mm-hmm.
And that grew out a series of articles that I wrote for Marketwatch, and ultimately grew into the book, positioning and looking at Bitcoin as an investment through the lens of finance and portfolio analysis and all those things that are in the book. So, but I have been involved in the industry for a while. I'm still with a lot of organizations in the financial sector. I speak to a lot of financial groups. I do everything from debates. I'm usually the pro versus a con from somebody who's a skeptic on Bitcoin, and we have those discussions. But I do think I come at this from a very respectful point to the investor and to the advisor. And I think that the financial firms and financial advisors provide a lot of value and expertise to their clients. And it's upsetting to me that they're not allowed to discuss this with their clients. And I think they do a disservice to the client who is looking at high returns that can be transformative in their portfolio and maybe get them closer to their retirement needs, but they don't have the ability to tap into the expertise of the financial advisor to discuss this with them. And I think that's a real disservice, and it's something that I speak on regularly, and I'm hoping that the financial industry embraces this more than they have. But a big part of this is education, and as I mentioned, the need for more data and more analysis to be done.
Mm-hmm. Yeah, absolutely. I understand. And I think it's a good point. I wonder how important for you today in your work is the ideology of decentralization?
Well, I think decentralization is very important from the perspective of the future. Because let's think back, and I'll draw this back to the finance community, and then we can see political terms of it and all of these other things. When you have centralization, you are inherently tied to things like political matters, things of power, governmental types of things, because centralized means that you have somebody in power and somebody who has to protect their authority and their position of power. And because of that, we have really seen financial systems that have not been beneficial to the regular person and have only benefited those in power. I mean, 2008, we don't have to look much beyond 2008 to recognize what's wrong with centralization, what's wrong with the status quo financial system that controls things and says this is the way things get done, and ultimately bring in political means to create regulations that protect the status quo. And I think that's detrimental to a global society, and a society where we want to basically provide more equality out there to people and more of an ability for people to succeed on their own. When you look at countries, when you look at places like Africa and the countries in Africa and Latin America, where they don't have access to funds or banking because they don't have enough money. They're unbanked, and their way of life is ruined because of that. And you have something that's decentralized and something that can benefit them. You've got to wonder, why don't they have access to this? So, I don't want this to get into a philosophical type of thing, but I think if you have something that's decentralized, that benefits more of humanity than our centralized systems, I think that's a good thing. Now, that being said, there are some benefits that we can see with regulation, and as long as it's regulation that's focused on the good of the most rather than the benefit of the few. And so, but I think this is the type of thinking, I'm encouraged that this is the type of thinking of the young people and the young generation who have grown up with seeing things differently. They now see the benefits of decentralization. They now see the benefits of globalization. They see the ability for them in their hometown to benefit somebody in a far-off land that they may never see, may never know, but they can benefit them, versus the view that we can only help people in our own silo, in our own country. So I'm encouraged by what they're doing, and I think decentralization is a way for them to expand their thinking and also expand the ability for us to help more people throughout the world than we've done in the past. And it's also a way to transcend some political views, which I think is very important given what's going on in the world these days.
Yeah, it's a good point. I mean, I usually like these discussions a lot.
I hope you like this one.
I like to get philosophical on these topics because I think that's exactly what's missing. It's very technical, often what people say. It's very news-driven. And I like to also see that there's more to it, right? That people do something out of a conviction and they do it because they think it makes the world a better place. Right. What do you think is next for crypto assets in the coming months or maybe even years?
Well, I do believe we will see more investment products come along to people. As I mentioned before, everything from ETFs to these multi-crypto investment funds and those types of opportunities. But what I think it's going to be very interesting for me. I mean, one of the places that I like looking at, and I think all of these things I've talked about, investments and investment products, those will come along, and those will be, I think, the natural progression. But let's really think about, and I know the work you've done with blockchain and your documentary, you really kind of explored the larger picture, what blockchain can do. And this is where it gets interesting to me. And there'll probably be things that I won't see that'll be past my time. But I think we could potentially live in a world where governments start to compete against each other for government services. I mean, can you imagine a world that's using the blockchain for a person in the United States to say, I've grown tired of getting my health insurance from my health insurance provider when there's a guy out in Sweden who does it better, more efficiently, and I can get health insurance from that entity out in Sweden. Or the person that says, look, the insurance provider that I have in the US is inferior to this insurance company in Iceland. So I want to use their services. It could be everything from governmental services such as land transfers, titles, and things like that. Could governments become more efficient, more streamlined in the way they do things and the way they provide services and government services, that they could transcend boundaries and have people from other countries use their systems for their purposes. Mm-hmm. So that in the U.S. we're tied to public services coming from the U.S. How do we know if they're the best organization? You can take a look at a lot of the organizations and public service providers in the U.S. and know that they are not efficient. They're a waste of money. Why can't someone else do it better? What happens if someone else is doing it better in Switzerland? Why can't I use them? Why can't I use them? And I think, I mean, this is a discussion that's wrought with a lot of details and a lot of points, cross-border, political, all those types of things. But could the blockchain flatten the world to that point where we now see governments competing with each other to provide services to their people? I mean, one of the areas I love watching is what's going on with Estonia. Estonia has created this e-residency program where you can become an e-resident of Estonia and you can actually get government services from Estonia. Now, you know, it's not going to be easy to have somebody come pick up your garbage if you live in New York, mm-hmm. but there are some other services that could be done. And if it's nothing but record keeping and paying someone for the service, well, why does it have to be within the country? Why couldn't someone else do it? If someone else is more efficient at handling health expenses and they just are able to send to the health provider their payment and they do it better than a provider with Medicare or Medicaid in the U.S., why can't people do that? And I think that to me is very exciting, what's going on with the blockchain and this whole ability for public services. Now, that's totally beyond what I think a lot of people are viewing the cryptos, blockchain, and Bitcoin for, but I still think it can be an outgrowth of this innovation that blockchain has brought to us.
Mm-hmm. Absolutely. I think we already see companies, offer insurance on the blockchain. We see companies offer identity services. So I think it's not that far-fetched to say, well, why do we even need all these government services? And then why do we maybe even need a government?
Yeah, I mean, we'll always need a government, but I mean, in the U.S., everyone talks about how bad the government is and less government. Okay, well, let's have less government. There's going to be a point where they're going to say, oh, no, that's not what we meant. Well, why not? Why not? I mean, if government is about just keeping us safe and protected and putting the bad guys in jail, and if everything else can be done by someone else, hey, who wouldn't be for that?
Yeah.
Who wouldn't be for that?
Yes.
So that's something when you say down the road, that's a thinking that I'd be encouraged to see more movement on. And like I say, it'll probably be something I may never see, but it just shows the reach of the blockchain technology.
Mm-hmm. Yeah, cool. In the shorter term, when do you think banks will exchange Bitcoins for US dollars?
If I had to predict, which it sounds like you want me to do, I think you'll probably see that within the next 3 years. And I think it'll 3 to 5 years, and if not sooner. I think it'll grow out of a Coinbase. Mm-hmm. Now let's not lose sight of the fact, and I think about this from the U.S. Okay, so I mean, this may be a bit provincial on my part. So it may be different out in Switzerland where you are, where obviously there's a little more progressive thinking. But I look at it in the U.S. and I say, okay, there are a number of financial firms and the stock exchange who have invested in Coinbase. And when you see a conference like Consensus, which is going on over these few days here in New York, and you're seeing all the suits and all the people from the financial services, they're looking at this. So I think there will be some point in time where some bank will step up and say, we want to offer this service. Because remember, banks are competing against each other, and they're going to provide this service. But what will have to happen is they'll have to provide it through a service like Coinbase, which does all the KYC, the AML, and all those regulations to ensure that people don't just have a public address, but they have a public address associated with their name. And if you do that, then I think you will start to see banks embrace it more and potentially even set up custodial situations where you could have banks holding Bitcoin for people in their accounts over the next 3 to 5 years.
Fingers crossed.
Well, yeah, yes and no. Yes and no. There are some people who say that would be good. There are other people that say that would be bad because, once again, you're now putting the banks back in control of this, and you are putting a centralized entity there. So it may happen, it may not happen, but if it does happen, it won't happen with a lot of controversy because of those two sides.
I think that's a very good point that you're making there. Jack, thanks a lot for taking time today.
Manuel, thank you so much, and thank you for your documentary and all the work you've done. I really appreciate it, and I'm glad that you and I had an opportunity to speak. Thank you so much.
Thanks so much for joining us today. More info on our guest and our sponsors is in the show notes of this episode and on the podcast website, theblockchainandus.com. To help people find this podcast, it's important that you download, subscribe, and give it a top rating and review on iTunes or on the podcast platform of your choice. I'm Manuel Staggers, and I thank you very much for listening.